I think, as I said earlier, human emotion is one of the biggest destroyers of wealth. And I think where you're lucky holding property is that it's not priced daily.
Yes.
So you're not looking at a value every day.
Yes.
You're buying and you're holding. And I wish investors would do the same.
Hi and welcome to the Property Pod. Today we're talking props versus stocks, and I'm really excited to introduce my guest to you. Her name is Linda Stonier and she comes from Stone Wealth Management. Hi Linda, thanks for joining me today.
Thanks for inviting me, Carol. Yeah, lovely to be here. Thanks.
Yeah, likewise. So Linda and I were actually at varsity together. We both did our LLBs together, and then she went on to get her Masters in Taxation as well as her CFP qualification. In 2007, she founded Stone Wealth Management, which she's built up with her business partner. They now have over 4 billion Rand in assets that they manage. So she's built it up into one of South Africa's leading privately owned wealth management businesses. So a real success story. And on top of that, Linda has 2 sets of twins. Linda, I don't know how you manage all this money plus your twins. Which is more challenging? The twins.
No, it's crazy, right? Like, who does that?
No.
But law school seems like just the other day.
I know.
Well, and I've still got your handwriting like imprinted in my brain from learning from your beautiful summaries. And but even back in those early days, I mean, I still remember how much you loved property.
Yeah,
and it's just
absolutely.
so wonderful to see that you've followed your passion.
Oh, thanks, Linda. Yeah, no, it's great. And I mean, that's why let's dive in. Props versus stocks. So obviously I'm passionate about property. So I'm prejudiced towards that and think it's a fantastic investment class. I love that it's tangible, bricks and mortar. You can see it, you can feel it. And I believe that when people buy property, even residential property, it should be part of a broader investment strategy. What do you think?
Absolutely. I always say before you start thinking about property, I mean, investments, whether it's property, cash, bonds, equity, offshore, local, you should be taking a step back and asking yourself, why are you investing?
Yeah, for sure.
So if it's to make a quick buck, it's speculative, then, then I'm not your right person. But if it's wealth creation,
yes,
then what we need to do is talk about building an investment strategy around that.
Yeah, no, that's interesting. So, I mean, I'm a bit of a Warren Buffett fan. So I've always believed that it's time in the market rather than trying to time the market. And that applies to property as well. I think the sooner you can get in, the better over the long term. But what do you do to build a wealth strategy for your clients? What are the steps involved?
So it involves quite a lot. But just typically, our clients are retired clients or clients approaching retirement, or they've sold their business.
Yes.
And most importantly, they don't have income producing years left.
Okay.
So it's actually quite scary for them.
Yes.
So how do you build a portfolio that can withstand the complexities and challenges that face investors, and particularly South African investors?
Yeah.
So you do need to build an investment strategy over the long term. So then what we do really is we take the capital and we break it up into 2 components.
Yeah.
Let's call them pots.
Yeah.
The one will be retirement lifestyle capital, and the other surplus.
Okay.
And we particularly precious about the retirement lifestyle capital because that is the capital that has to produce your income goals escalating until the day you die,
yes,
and any other goals. So be that replacing of a car every 5 years,
yes,
going overseas every 2 years. So whatever your goals are, that capital needs to support that. So we calculate what that is, and then we calculate what the required rate of return is to achieve those goals.
Yes, yes.
And then we appoint specialist fund managers.
Yeah.
And what they do is engineer portfolios using various asset classes to produce that particular required rate of return.
Wow, amazing.
In as predictable a manner as possible. We try and remove as many question marks as possible. It isn't an exact science, but that's what we want to do. So with that lifestyle capital, we want the clients to have complete peace of mind.
Yeah, no, that's important.
Yeah, and then the surplus capital, that's the exciting bit. That's the wealth creation. That's those are the assets that are going to, be the intergenerational transfer of wealth that's going to happen down the line. And that's property and and direct offshore investments or private equity. But that's the exciting stuff.
That's the exciting stuff. Yeah, that's what I love. I mean, for me, I think risk is a huge factor. So how do you sort of manage risk? Volatility is obviously a big concern in stocks. In property, I think somehow you look at it, you see it standing there proud, it's bricks and mortar. So it stands the test of time, and there's maybe less day-to-day volatility. You're not seeing a chart every day that's freaking you out, So let's talk about risk a little bit.
Okay, so risk for long-term investors, without a doubt, your biggest threat will be inflation.
Oh, wow.
So, human emotion is the biggest destroyer of wealth, and we can talk about that later, maybe in another podcast. But inflation is really, it's sneaky, It's going to erode your capital over, and you're not even going to know about it. It happens like slowly.
Yes.
So that is the investor's true nemesis.
Okay.
So we need to build portfolios and find asset classes that are going to beat inflation. So that should be the objective.
Okay, perfect.
For long-term investors.
And then what do you say to people who think investing in shares is gambling?
So I think if you're looking at trading, and you see those people that have these programs and they trade, and that's speculative and that is risky.
Yeah.
But if you are buying quality companies and you're holding those quality companies over a long period of time, it might be boring.
Yes.
That's investing. So there's a difference between speculating and investing.
Yes.
And and it shouldn't be exciting because it's a hold strategy.
Yes.
And the outcome, the longer you hold the investments, the more predictable the return, actually.
Okay. So actually it comes back to time, which has always been my philosophy as well. Always a buyer in property, try not to be a seller. So just keep accumulating like you're playing Monopoly and just build up your wealth portfolio over time.
Over time, yeah. They say think in years and comprehend in decades. I mean, that's investing.
Okay, perfect. And then Linda, you mentioned something to me earlier when we were chatting, asset allocation. Tell me a little bit about that. What is that all about?
Okay, so asset classes are critical in a portfolio. So, everybody's fixated on whether they buy a Naspers share or they buy an Nvidia share, but they lose sight of the fact that asset allocation actually accounts for 94% of the variance in return. So it's a critical aspect.
Yes.
And what I mean by asset classes, so it's basically like where you invest your money. Do you go property, cash, equities, bonds? Do you go offshore, local? It's how you mix those asset classes
together.
Yeah.
And I mean, what is your view then on having property as part of your portfolio mix? I mean, to me, it would be a no-brainer. I wouldn't sleep at night if I didn't have some property in the mix. So when you mix it up and you do your asset allocation, does property play a role?
Absolutely. And it's one of the five main asset classes. Okay. So if you think about it, there's really only cash, bonds, property, equities, and then hedge funds, and then and you get a local and you get an offshore component of that. Those are the main asset classes. So if we look at, let's take cash, we quickly unpack that. So cash is your riskiest asset class over the longer term. And you probably think I'm crazy when I say that, but it is the one asset class where you're almost guaranteed after tax to lose money because you're not beating inflation.
Yeah, for sure.
So many people who hold on to cash are recklessly conservative.
Yes.
So cash, it isn't going to do it. It has a place, but it's not going to beat inflation.
Yeah.
Bonds have had a wonderful cycle lately.
Yeah.
But if you take them over long term, and we only really look at long term, it does beat inflation, but it's nothing exciting.
Yes.
So then if you look at equities and property as being like the remaining asset classes, if we ignore hedge funds, those two asset classes are really the heroes in that they do the heavy lifting when it comes to beating inflation over the long term.
Amazing.
And when I say long term, and we can take it right back to 1900s for shares. If you look at
I mean, you sent me that interesting graph where I think you took R1, invested it in 1900, and you showed me the difference between the different asset classes. So maybe we can quickly talk about that.
Yeah, it's actually quite staggering because if you look at it and you take your R1 in 1900 and you look at what your R1 would be in today's values, and I mean, I did this exercise a little while back, so you know, it probably could be revised, but your R1 would be worth like R1,000 today. But that R1 invested in the stock market, just the index, would be well over R1 million.
Wow.
I mean, it's just, in fact, it breaks, if you actually put it on a graph, it breaks the graph. I had to actually, when I demonstrated on the graph, I had to actually
break it up because the disparity was so massive between cash versus actually investing.
Exactly. And although equities is you know, delivers long-term inflation plus 7, the compounding effect of that is, you know, they talk about the seventh wonder of the world or eighth wonder of the world is compounding, and it absolutely is. It's mind-blowing.
Wow. I mean, let's come back to property now, because obviously that's my passion. Yeah. For me, one of the benefits of property ownership is that you can gear your investments. So effectively, you're using somebody else's money, you're using your bank's money, and then you've got a tenant to pay off the bond. So that's what makes it exciting. It's the one asset class that you can gear. I mean, you can't do that with other stocks.
Absolutely. I mean, there's no other asset class that I can think of where you get somebody else to pay for your asset. So as a strategy, especially for younger people, I think it's fantastic. I think it's a great strategy. You know, if you but then again, there's property, and you're the specialist. I know nothing about property, but you know, it's all about selecting the right property,
stock in the right area,
and choosing the right specialist
to help you. Absolutely.
To find that.
Yeah, no, I'm a firm believer in gearing, and let's talk about pros and cons of properties versus stocks. And maybe actually the conversation is more around, it's not a case of properties versus stocks. Let's actually bring them together, because they both play a role in building wealth.
Absolutely, they play a big role. And within our portfolio, we do have property allocation to the REITs, you know, and our managers will increase or reduce exposure as they deem necessary. But again, lifestyle capital is one aspect, but for surplus capital, I think it's critical.
That's where you can play in your property.
Yeah, I mean, I personally own, I've geared property. Myself and my business partner own various properties that are geared, and that is our surplus strategy.
Which is amazing. And I mean, you've got the benefits of short-term rental income via Airbnb, or you can get your long-term more stable tenants. What I love about property is that you can renovate and decorate, so you've got an immediate upside as well. It's a creative outlet. So I guess it's probably the one investment where there's a little bit more emotion involved, especially residential property. And I know that investors always say that emotion is also the nemesis of being a good investor. So maybe we can talk about emotion as well quickly, Linda. I mean, when you're dealing with your clients, I know for me, one of the reasons I'm terrified of stocks is because I see the charts doing this and then I panic instantly.
So I think, as I said earlier, human emotion is one of the biggest destroyers of wealth. And I think where you're lucky holding property is that it's not priced daily. So you're not looking at
charts
at a value every day. You know, you're buying and you're holding. And I wish investors would do the same. They just don't look. Because when you invest, there is volatility. You know, markets zigzag up. It's not just a straight line, and that zigzag, I mean, they can be flat for periods of time. They can you can have quite pedestrian returns for a while. You can have negative returns for a while, but over the long term, the trajectory is always up. But you've just got to be disciplined, and that's and a big part of what we do is to help our clients through those difficult
panicky times
when COVID or you know, the global financial crisis and various crises. Now we've got all this geopolitical risk, but just to keep people focused and keep them invested, and just not to look at the value, you know, as you wouldn't with your property.
100%. Oh, Linda, thanks for all your advice. If you've got one last piece of advice, what would that be?
I think I would tell investors out there, you know, once you've built your investment strategy and you've integrated your tax and estate planning, the most important thing is just to stick to it and to stay the course and to just block out the noise out there, because I think that is what damages so many people's portfolios. And I'd like to end off with the quotes from my book. It's actually by Bill Backrack. And it says no external events is the determining factor of financial success or failure. The determining factor was, is today, and will always be the choices made before, during, and after these events. So in other words, it's really just about staying the course.
Yeah, amazing. I love that. Thank you, Linda. So, key takeaways: it's not a case of property versus stocks. You bring them together in a managed portfolio. You keep focused on your goals. You don't allow yourself to be swayed by drama and noise and external events. And you get someone like Linda to keep you on track. So if you want to get hold of Linda, how can people reach you? Where can they find Stone Wealth?
It's probably easiest just to look on the website under Stone Wealth Management.
Thank you. Awesome. Well, thanks so much for joining me today. It's been such fun.
Thanks.
And that's it from me. I hope you enjoyed it. And remember, if you're wanting to invest in property, which I still think is number one, call Pam Golding Properties. We're the number one agents who can assist you.